This week, the big economic news is on Wednesday when the December wage price index is released. And joining me now on the set is independent economist Warren Hogan. Warren, thanks so much for your time. What are you expecting to see this week with wages?
Well, I think we're going to get another reasonably large number. I'm thinking about 1.1, 1.2% in the quarter. That's a little higher than the market. The market's at 1%, and it's in line with the previous quarter in Q3. The Q3 numbers were boosted by the minimum wage decision. I think some of that will still flow in Q4, but the reality is everything we're seeing from the business community is that they're paying higher wages, and I think that'll slowly start to show up now in this wage price index.
Yeah, we've got a chart we can put up on the screen just showing private sector wage price index. What's this graph telling us?
Well, it's the key number, the private sector. The public sector number's lagging this upswing, so we want to look at the private sector. That's what's going on in the coalface. That's what's going on in the market. And what I've done there is put the 1.2% quarterly rise in for the first half of this year, as well as the Q4 numbers. And you can see quite clearly our wages suddenly become a problem. The RBA wants them to settle down eventually around 3.5%. That's consistent with their inflation target. But the momentum that's building on the back of this strong economy and these tight labour markets means that we could easily have near 5% wage growth by the middle of this year. And of course, that's very different to the narrative for the last 18 months has been, well, even longer, has been low wages and wages aren't going enough. Well, now they're starting to come through. And of course, this is what the governor last week in his parliamentary testimony was warning about, is these outsized wage increases.
When do you expect wages may catch up with the CPI index, with inflation?
Well,
this year, or?
Well, I think CPI will probably come down to around that 4 to 5 mark, and wages will get up to around that 4 to 5 mark by the end of this year. So we'll start to see real wages start to equalise at around early 2024. But the problem is the wages growth of around 5%. You're not going to get CPI or core inflation any lower than 5%. It's the biggest cost base in this economy. We're a services economy. Most of that cost is labour. That's what the inflation the RBA is worried about. So even if they do align at around 5%, that's great that we're not eating into real wages anymore. But of course, it doesn't mean the inflation battle is won, and the RBA is worried about that.
Unemployment rate last week, it ticked up to 3.7%. Seems like a bit of a surprise to some people in the market. Do you think that's just a blip due to the seasonality of the holidays, or is this a trend and we're going to see unemployment continue to rise throughout the rest of this year?
The number has some statistical problems. It's always a very noisy data series month to month, so I'm not reading too much into 1 month's figures. So let's see a couple more. Reality is every other labour market indicator is solid. It's cooled from extraordinarily strong rates of labour demand last year, but they're still strong. I don't think the unemployment rate is heading higher, but of course, if it does, that's a big part of the RBA's job getting done. I think an unemployment rate of around 4%, maybe a bit higher, will tell us that that excess demand is coming out of the economy, and that will give them the green light to pause on rate hikes. I just don't think this number is the start of that trend yet.
And the RBA governor, you mentioned him, he was in the hot seat in Canberra last week before 2 parliamentary inquiries. How do you think he performed overall?
Look, I think he did well. He's under extraordinary pressure. The government doesn't want to be associated with these rate hikes. He's been thrown to the mob. And he took it in his stride. I don't think there was all that many tricky questions asked of him, technical economics questions. There was a lot of politics in there. But he did what all good central bankers do, and that's not say too much, not pin themselves down. And of course, on Friday, in his second testimony, he did the most important thing. He explained that if we don't continue raising rates and slowing this economy now, the outcome will be severe. That is a runaway inflation, much higher interest rates than anyone's contemplating now, and of course, a damaging recession. And it's important that he explains to the Australian people and the political leadership that outcome is a very real prospect if we don't get on top of inflation now.
Warren Hogan, independent economist, thanks for coming on the show today.
Thanks, Ed.